Well, it's great to visit with you about our ag commodity markets. I'm Marlon Bowling with you, your tour guide to the ag trade, and we're going to take a look at the markets with a little help from Mr. Ted Seifried of Zaner Ag Hedge. He joins us from Chicago right now. Ted, always good to visit with you about our markets, and I appreciate having you come on here today. We seem to be in a bit of a quandary when it comes to what the markets want to do. We're getting mixed signals out of the grains. Just wanted to get your take on that before we dive into our prices here. And then I wanted to get your idea on what you thought about the weekly export sales, too.
Yeah, Marlon. I got to say, this kind of makes sense, right? I mean, you look at the export sales, corn was poor. Beans were good. And you've got beans stronger and corn just a little bit weaker. Same thing with wheat. Wheat sales were really not that great. And so under a little bit of pressure there, too. And this is just kind of speaks to the whole dichotomy of what we have as far as fundamentals are concerned for the row crops, right? I mean, you have a very different corn balance sheet than you do a soybean balance sheet. And I think as we start to prepare for next week's WASDE report, as the analysts start putting pencil to paper and start, running their numbers for what they think the USDA is going to say at the end of next week, I think we very much feel the difference between the situation in corn and the situation in soybeans and the situation in wheat. Soybeans are just a different animal, right? Soybeans have the potential to have the tightest balance sheet that we've seen in the last, really long period of time. I mean, throughout the whole high prices scenario that we've had in the last 2 years, this could be the most bullish soybean balance sheet that we've seen. But at the same time, you've got a really big corn balance sheet. It's very difficult, I think, for analysts like myself to come in with less than a 2 billion bushel carryover for corn. And I think everybody's wheat ideas as far as harvest is concerned, as far as yields are concerned, are coming up just a little bit, even after the year that we just had. Soybeans are a different animal, and you're seeing that on the board today.
Ted, with December corn under $5 right now, you think that has brought new crop hedging to a screeching halt?
Yeah, I mean, if you haven't been fairly aggressive on it now, you really don't love the idea of doing it with a floor in front of it. But, I will say this. At 496 3/4, it's a lot better than 480, and it's a lot better than 430. And for the fact that corn just cannot keep its head above $5, I think that is a wake-up call. That is a red flag. That is something that is asking you to take action on. If you haven't already, really, in an ideal world, we would have had sold $6 corn all the way through. But if you haven't, I think that this price action, the way corn is acting, is really asking you to do something with it now.
Let's look at the corn. December corn down 3.5 now. We're at 497. If you look at soybeans, well, you have November down 5.5. We're at 1326 and 3/4. Meanwhile, on the wheat, let's go to Chicago. We have December Chicago wheat down 6 3/4. We're at 660.5 right now. Look at that, 15 cents off of our overnight high. In Kansas City, you have December currently 12.5 lower at 788.5. Oh, that'd be about 6 cents from our low of the day. We're off of our overnight high by 20 cents in that December contract. Minneapolis spring wheat trade. Well, here we're down 6 3/4 on September at 842.25. And catching the cotton market. Let me get the right one here. Cotton on the futures market. That's a pretty cool trick. The December contract is down 80 points at 83.79. So that would put us over 100 points off of our earlier high this morning. It couldn't quite get to 85 cents this morning. Ted will come back in a moment and we'll talk about livestock right after this. Come on back. All right, let's go to the livestock trade right now. We'll start with our live cattle like usual. And on the live cattle board, they have been very slow to get going. They've been pretty flat all morning long. Now they're starting to wake up. Look at this. We have October live cattle now 55 higher. We're at 181.05. Okay, that's almost $1 off of our earlier low this morning. How about that? They're waking up. December up 67 at 185.27 right now. Let's go to the feeder cattle market and see what they're doing. They're a little higher too. So they're kind of following each other around here. We have September up 75 at 250.85. Well, that happens to be on the high of the day. And October 72 higher. We're at 252.57 right now. Same story there. Also a new high for the day as we look at it. Well, let's look at the lean hogs. Now, they've been in trouble today. You have October down 297 at 81.90, so we're still having a lot of selling pressure here. But it's off of its earlier low by about $0.50. Now, December is down 272 at 74.15 right now. Let's go back to Ted Seifried and talk about this. Cattle starting to come alive a little bit, but lean hogs. What's with the lean hogs today? It's like somebody gave them a concrete anchor around their neck.
Yeah, what is with the lean hogs today? Indeed, Marlon, it is a rather negative day. But you know what? We had been very overbought, and we had been doing that for quite some time. It was time for a bit of correction. And so far, from a technical standpoint, we really haven't done a whole lot of damage to hogs here today. We've come down, and we are sniffing out the 100-day moving average. We haven't quite gotten to it yet. And that's just kind of a normal thing when you have a pretty sharp rally from the end of May all the way through the beginning of August. So I don't know if the fundamentals for hogs have really changed much. You see cutouts continuing to gain value. We're consuming pork, right? So I think this is more of a corrective in nature. I would be looking for a defined support sometime here relatively soon. And I'm not sure we have to get through the highs, which, by the way, were the 200-day moving average. It's a very, very suspect area to have a correction from. I mean, you kind of expected that. But, yeah, the hogs move violently, and this is another one of those days. And I think it's just more of a technical correction than anything else. Now, cattle, got to say, really impressive cattle. We had the reversal higher day on Tuesday. Then we were down yesterday, but an inside trading day. And then we were higher again today. So holding on to that strength. Counter-seasonal. I mean, this is the time frame where you would expect cattle to kind of sell off or have a deeper correction. And so far we haven't done that. And a big reason for that is because we haven't seen that happen in box beef prices like we normally would this time of year. Normally, we see box beef really slow down at this time of year because it's the summer doldrums. We've had our fun, and now we kind of sit back and watch our wallets a little bit closer. But that's not been the case, really. And so that's going to keep pressure on cash prices, keep pressure on packers. They're likely going to have to bid up here later in the week, and that's keeping futures stronger as well.
All right, we'll have to wait and see if we get these exporters to buy more U.S. beef next week. That weekly sale was actually pretty pathetic this past week. So way under 20,000 tons at only 12,600 this time. All right, thank you, Ted, for all the comments today. Great to visit with you again. Take care of yourself. Ted Seifried of Zaner Ag Hedge with us from Chicago. So, Suzanne, the beat goes on. Hogs still having trouble.